Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Aaron Michael of 1984 Ventures. Aaron, thank you for joining us.
Thank you for having me, Paul.
Well, I understand you co-founded PathSource, a venture-backed edtech startup, and have done other things to lead you where you are today. But can you give us some background about your path to this world of venture capital?
Sure. So my background is I'm from the Boston area, went to education-wise, went to Boston University undergrad, then Harvard Business School and the Harvard Kennedy School, and then came out to the West Coast to work in clean tech, which I worked with a company that raised about 150 million and good experience in the hardware space. But I learned a lot about the margins in hardware, which is one of the reasons why I now invest quite a bit in software. And eventually got the itch, like you often do when you live in Silicon Valley, to start a company. And I actually started a couple of things. One was a company called Fantasy Politics, which was fantasy football for politics in the lead up to the 2012 election. And the goal there was really to sort of build greater engagement among young people ahead of the election, because it had really, even at that point, dropped off after the 2008 election. I think that ended up, from sort of at the impact standpoint, doing exactly what we wanted to do, and it was a great ride. And then started a venture-backed company called PathSource that enabled people to figure out what career they wanted to go into and showed them the educational path, the school to get there. And we worked in K-12, a little bit in higher ed, in adult education, partnered with the GED. We eventually expanded into B2C as well. That got acquired by Academics Direct in March 2017. And shortly after that, I joined 1984 Ventures as a partner.
Well, that's great. So how did you get into the current position you have now at 1984?
Yeah, so the founder of 1984, a guy named Rami Adib, who really, really impressive background. He had worked at Khosla. He founded a company that he sold to Yahoo. Just a really pretty amazing guy, both from a business standpoint as well as a personal standpoint. He and I had known each other for the better part of the past decade, and he had actually informally advised me on my last company, and was always one of those people, and one of the very few people I could go to for advice when I was trying to sort of wrestle with a difficult challenge at PathSource, who had been on both the venture side and the entrepreneurial side, and I really valued that. And so when I sold my company, we ended up having a conversation, and when he offered the opportunity to come on board, it was something that I had thought about every once in a while over the years, but had never really actively pursued, just because I had been engaged in my own entrepreneurial endeavors. But it was an easy decision for me to make, and it was an easy decision on a couple of levels. One, I was really excited to work with Rami. He's just a really fantastic and brilliant guy with a really amazing background on both the venture and entrepreneurial side, but also because I had, from my experience in starting ventures, developed a pretty good sense of my own kind of theses about what did and did not work when it came to venture capital. And what Rami was kind of envisioning for sort of the investment strategy behind the firm melded and meshed really, really well with kind of my view as well, which is to not chase shiny things and effectively invest in the sorts of businesses that everybody else finds boring and we find really, really exciting. And I can talk more about that investment strategy if that would be of interest.
Well, sure. But before we get to that, you've seen investing on both sides with startups, both as a CEO and then as an investor. What's your advice for people who want to invest in startups? What should they look for?
So there is often a tendency to focus on the technology and to look for technology that's really cutting the edge. As a friend of mine likes to put it, technology that's splitting the atom in one way or another, and then making an assumption that that technology is going to do really amazing things and that enormous markets will be built around that tech. And my view is that that's a very risky approach. It can sometimes work and you can sometimes have amazing outcomes, but I'm much more of a believer that everything good starts with a screaming need on the part of some form of a customer that you as an entrepreneur have discovered and you want to solve, and you figured out a way to solve it that is better than anything else that's out there. It goes back to the YC saying, build a product that people want. I'm probably mingling that a little bit, but that's a pretty good paraphrase, I believe. And it really comes down to that, creating something that there is a real need out there for, and understanding what that need is, understanding your customer, and being able to solve that need and find distribution for it.
So at 1984, what is your investment thesis there?
So the investment thesis is pretty straightforward. I'll start with what we avoid. We avoid hype, so no crypto. We avoid hardware, so no flying cars or drones. And we basically invest in companies that are disrupting stable, mature, antiquated, multi-billion-dollar industries. That ends up leading quite frequently to verticals like logistics, like back office, healthcare, fintech, and so on.
Well, and how did you come to that thesis? Why are you taking out hardware, for example, and what led you to that?
Because I like margins of 80 or 90% instead of 30 or 40%. When it comes to finding great businesses, I think that the best bets are when you can find an industry that hasn't changed in the last 30 years, and somebody comes in with a piece of software and is able to say, hey, I have found a major problem in this industry. The industry has really not changed very much, and I've got a proven technology solution that I am applying in a novel way to solve this specific business problem and use case. And as a result of this, we are able to address a massive market and turn this industry on its head.
So for startups that fit your thesis, what's the specific criteria they need to meet? For example, do they have to have revenue to get in the door at your place?
They don't have to. They usually do. So the parameters around that are a little bit nebulous in the sense that, well, we've turned down companies that have a number of millions in ARR, and we've invested in companies that are effectively pre-seed rounds, although we usually invest at a seed stage. But usually what we're looking for is some sense of product market fit. We're looking, number one, for a great team. Number two, for a huge market. Number three, for the right product. And number four, for product market fit. And that usually means that the KPIs, whatever those may be, are heading up and to the right, and that there is some initial pretty positive revenue moving in the right direction. But the first thing that we're looking at by far is the who and then the what.
So you see a lot of startups coming in that want to raise venture funding, and you're looking for KPIs that are going up and to the right. What's the biggest challenge you think they face in delivering those KPIs? Where are they falling short?
Sure. So the nature of these types of businesses is that they are not universally, but for the most part, they tend to be B2B businesses. And they tend to oftentimes be selling into reasonably sized enterprises. Again, none of that is a universal rule, but more often than not. And when that's the case, the challenge is often making sure that growth is sufficiently fast to build a really scalable, exciting business in whatever space that entrepreneur is in. And so I think that the challenge, for instance, if you're looking at a company that's selling into banks, where you often find antiquated processes in areas ranging from mortgage servicing to commercial lenders. And so when it comes to all of those types of businesses, geez, you're talking about long, slow sales cycles. And then the question becomes, well, can that entrepreneur find a way to hack their way in? Can they find some sort of a growth hack that enables them to really speed things up in a meaningful way?
Makes sense. And as an investor trying to invest in these deals, what are the risks they face as well, trying to sort through the different groups? And there's team risk and there's product risk and there's market risk, but where do you think the key risk is that investors are faced with in order to make successful investments?
So this comes back to the first who, then what, by which I mean the people come first. You have to make sure that at the top of the company, the founders are exactly the right people for the job. And the typical terminology for this is founder market fit. So I'm a big believer of, if you are going to do a ton of diligence, and you have to do a ton of diligence, that a good amount of that diligence should be targeted at the founders themselves. It is absolutely amazing how frequently people sort of spice up their resume / LinkedIn profile. How often there's just stuff that is not 100% correct. I came across an instance where a founder listed a reference who it turned out they were engaged to and didn't disclose that. There's all sorts of stuff that is just, you really have to dig. And it's not enough to just make one or two reference calls and say, oh, all right, looks pretty good, call it a day. You have to dig in and make sure that you've got exactly the right founder, because there will be a ton of challenges that come up. One of our venture partners has a great saying that every successful company has 2 or 3 near-death experiences. And I think that is exactly correct. And part of our job as venture capitalists is to take a hard look at the founders and say, is this somebody who is going to be able to weather that storm? Are these co-founders going to be able to make it through difficult times together, because those difficult times will inevitably come? And will they be able to take that company through that and come out better on the other side? And part of the benefit of having both Rami and myself be people who have started companies ourselves is that I think that gives us a much better lens than we might otherwise have into, hey, is this the right founding team to address this challenge?
So you mentioned several sectors that you guys invest in. Which of those sectors do you think has the most opportunity for a startup to pursue, and why?
So we have a number of sub-theses that we're always on the lookout for. A couple of areas that I'm particularly interested in are, one, in staffing agencies. The staffing agency space very much falls into the old, antiquated industries that are massive and haven't changed in decades. There are multiple multi-billion-dollar companies in that space that really are doing things in exactly the same way that they've been doing since the 1980s. And I think that there is a very significant opportunity for the companies to come in and really disrupt that space in a meaningful way. Plus, the acquisition of Monster a couple of years ago, I think probably got a number of the players in that space more interested and awakened to the fact that, geez, there are some moves being made by other players in the space, and perhaps we should be looking at not only doing more R&D, but doing more acquisitions. And I wouldn't be surprised to see over the course of the coming years a more significant acquisition spree that happens in that space, because a lot of those companies have pretty attractive war chests in order to do more M&A. So I think that's one area that's pretty interesting. Another area that I'm interested in as well is senior living. I think that there's a lot of interesting opportunities there where there are all these companies that are focused on millennials, and you've got a demographic shift that is happening in the U.S. that's going to result in a lot of seniors across the U.S. with a wide range of needs that are not necessarily being fully and thoughtfully addressed. And if a company is able to come along and start addressing some of those things more meaningfully, I think that has a lot of value as well.
Well, in the last few minutes we have for today's interview, what else should we cover that we haven't?
Sure. I think that one area that might be worth talking about a little bit is how companies and how entrepreneurs are kind of thinking about and approaching the question of what sort of company to start. And more specifically, there's sort of a look that before you leap that should happen on the part of an entrepreneur that very frequently I've found doesn't actually take place. And that's something that's worth discussing for a minute or two, because for the benefit of your audience, many of whom I would imagine are probably prospective entrepreneurs who are considering whether or not to start a business, something to consider before you take years out of your life to pursue a dream and pursue a vision, and where they are going to be working late nights, maxing out credit cards, and doing a lot of other things that are challenging, difficult, and occasionally kind of miserable. They should really take a hard look at whether this is the right opportunity. And that doesn't happen as often as perhaps it should. And in particular, a couple of things to take a hard look at are really understanding what the competition looks like in a given space and understanding what's been done before. I just had a conversation with a friend the other day who had already put a lot of work into building a chatbot. And he said, hey, what do you think of this? We're thinking about selling it into XYZ industries and so on. And the product wasn't bad, but before taking all of the time and money to build it, he hadn't really looked at what the competition was. And the reality is there are over 70 different AI-powered chatbots that are out there in the marketplace. And it's important he really should have taken a harder look at what was out there and what was being done. And so taking a look at that type of question ends up being very important. That's one. Two, taking a good hard look at what's your TAM, your total addressable market. Is this company that is, if successful, able to create something that is really huge? And if not, then it's probably not going to be venture backable. It may still be a very attractive business, but if you want to build a business that is a highly scalable venture backable business, you have to have a multi-billion-dollar TAM. And so that's something to really understand as well, and not just kind of assume that there's going to be money there. And this is not the sort of thing that should be looked at with rose-colored glasses. And entrepreneurs looking at this should look at it with the most skeptical possible lens, because they're going to be putting time and money and relationships on the line in order to make it work. And so I think that is something that is worth just bringing up and having a good conversation with your listeners about, because far too often this is something that is sort of almost an afterthought as opposed to a major endeavor that should be undertaken before starting a company.
Well, those are good points. I often see startups entering industries they know nothing about, trying to solve problems they're not familiar with. And that seems to be a fatal flaw for many startups, that they don't have a good grounding there. But so how best for listeners to get back in touch with you?
They can reach me on my email, which is Aaron, Aaron, at 1984.vc.
All right. We'll put that in the show notes and hope to have you back for a follow-up soon. Appreciate your taking time today and appreciate all the feedback you've given the audience.
Thanks so much, Al.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.